Thanksgiving is right around the corner, my favorite holidays. But guess what? We still want to talk about what's going on in the market. One of the things I get asked a lot, and people always say, hey, can I get a lower rate now that Fed has cut rate? And I have to emphasize again and again and again that the Fed fund rate does not directly affect the 30-year mortgage rates. And ever since the Fed cut rate the last time, the 30-year mortgage rates have been persistently going up. And there's another interesting development that's happening behind the scenes that's actually keeping the yield very persistent above 4.1. That's the 10-year Treasury yield currently standing right now above 4.1. So if you add a 2.25 margin, you're looking at 30-year on average about 6.3, because the bank has to make money, right? Now, what's happening behind the scenes, I'm going to explain to you. And so if you're a buyer waiting for the rate to come down, you probably tell yourself, you know what, that is not going to happen anytime soon. I want you to hear what I'm saying and maybe adjust your strategy to focus on something else that's going to help you in the long term. So what's been happening? For years, Japan has been kept their interest rate near zero. So investors have been borrowing yen because the cost to borrow is zero. They convert to US dollars and they invest in high yield treasury bonds. That's called carry trade. Make sense? But the bond yield for the Japanese long-term bonds have been spiking up. The investors are getting squeezed on both ends. Now they have to pay interest. At the same time, yen is strengthening against the US dollar. So they're losing money by converting the US dollars back into yen to pay the increased interest cost. So what do investors do? They have to unwind the carry trade by selling the treasury bonds. When investors sell treasury bonds, yields go up. That's why the 30-year mortgage are going up. Unfortunately, this carry trade unwinding will continue. So the pressure on the long-term yield going up is significant. That's why a move in the Japanese yield will push the US bond market yield higher, even as the Fed talks about Fed rate cut. If you're a buyer, you want to get into the market and you've been waiting for this rate to keep dropping, but I'm telling you, it's not happening anytime soon. What can you do? Focus on things you can actually control. For example, looking at listings as being on the market for a little bit longer, so you have a better negotiation with the seller. There are many sellers that are in kind of a panic mode right now. They want to get rid of the property. So negotiate the maximum seller concessions, because depending on the program, a lot of them allows you to go 6% for the seller concessions, and use that amount because that gives you the most flexibility. You can do permanent rate buy downs in closing cost. And if for whatever reason they don't budge, move on to the next property, because there are plenty to choose from. I hope this helps. In my next one, I'm actually going to talk about what is going on with the Bitcoin price. You don't want to miss that one. See you guys very soon.